well, that's trading strategies, but all eyes will be on Uttar Pradesh, at least in terms of the result outcome and how the markets read it. Tirthankar Patnaik of Delicate joins in to talk about that. Tirthankar, morning. First, how did you read the way the market chose to move yesterday in reaction to a potential SP majority win? What does it translate into for equity markets, really?
Well, market was actually pricing in Congress SP alliance up 2 to 3 weeks back, and clearly what's shown in the exit polls has been a disappointment to that end. Nothing can be said on exit polls, things can swing either way, but there has been some disappointment, of course. People are not really factoring in that kind of highs that were expected from a Congress SP alliance. Market has corrected about 6-7% from the Feb 20 all highs. So there's been some sort of recognizance of this fact that Congress may not be in a big position in UP.
Morning, Tirthankar. Do you see more of a reaction if the exit poll turns out to be true and the SP actually goes on to form a government with a majority or a near majority?
Unlikely then. The way I'm seeing it is the market has been factoring in that, as I said, Congress may not be in a pole position at this point. By pole position, I mean just that they'll be in a position where they will be either forming the government, and such an alliance then translates into the center. So we saw some reactions yesterday, and I would say that, given this, the downside from now on could be limited. I don't think there'll be a big position. I think the focus would now go on back to what's happening in the budget, and then there's the RBI policy and obviously global cues, what happens with crude going forward. From valuation perspective, India has seen a considerable upside in the beginning of the year, and then there's been a sort of a course correction, and at this point I think the focus will shift back from elections. Not too much of a downside at this point.
Let me ask you about some of the reactions that we saw yesterday, which were quite sharp. JP Associates was down about 5-6%. Do you think that's warranted given the expected results or the exit poll findings? Do you think there is material impact on that stock if indeed the SP comes in?
Well, market's reaction yesterday on JPA as well as the ADAG group stocks have been on their perceived allegiances to various political parties, and what we saw yesterday was merely a reaction of that. I think we might see a little bit more of that coming in if the exit polls do turn out to be a purveyor of the truth this time. So you might see JPA correcting a little more, and Lambani stocks basically going up a little more. But I think, as I said, the focus of the market is largely on the budget now. I think what happens in the budget, are we going to look at a reform oriented budget? Are we going to see the fiscal math coming up properly? And essentially what happens with the crude, of course, not really the elections.
It's not just companies like JP Associates, Tirthankar. A lot of capital goods and infra companies have sizable projects in UP, and the perception or experience from the last time round is that the SP led to a sort of Gunda Raj state. Would you worry about what happens to any other stocks aside from the ones the market has chosen to deal with? Any dark horses?
I'm not an expert on politics, Mithali, so I don't know. I'll find it hard to comment. But given stocks that have had some interest in UP, the ADAG group comes there. There's Lanco, and then there's JP on the other side. So one has to see. One reaction, we've already seen the preamble yesterday. We might see Act 2 today, but that will essentially be it. We will not see anything going forward from now.
On sugar specifically, Tirthankar, do you think it's material given how the last two regimes have panned out for that sector?
See, the SP government, when it was in power, it set up almost, I think, 29 odd sugar mills. So it is perceived to be quite friendly towards the sugar mills, and that also showed up in the reaction that we saw on sugar stocks yesterday. But yeah, I mean, if the SP does indeed come to power on its own, then you might see a further leg up for sugar companies. Practically, because these are not large cap companies, right? So there might be some reaction that will keep coming in. But this is not something material for the market as a whole, I'd say.
By the way, at the top of the screen, you are beginning to see early leads and wins. So SP1, BJP1, that number will keep shifting and fast once counting starts heating up. Tirthankar, for the short term, what is it that you guys are holding out for the market when it is done with things like the elections, the budget, etc.? Are you working with where you intend to see or will likely see the market by the end of March?
See, we are looking at a significant correction in rates for this year, Mitali. Probably not as much as the street is putting in, at 150 odd or basis points. We are looking at 100 basis point cut in the repo. In the near term, of course, we are looking at a cut in the CRR. The RBI is, borrowing at the repo window has been nearly 2 trillion rupees on a daily basis, and intervention in the forex markets by the central bank has not really helped things there. So we might see a CRR cut coming in sooner rather than later. 50 basis points at least is what we are looking at. In terms of a rate cut, we will see that happening from April and going forward. And on inflation, which is the key thing here, you might not see the impact of rising crude and rising metals coming in anytime soon. So you will see that about 2 quarters later. So in other words, that translates into inflation coming down all the way until July, August. So we might see a start of the cutting cycle by the central bank in April, and ending at roughly 7.5 on the repo by March of 2013. And on basically currency also has to play in line. We believe that the rupee will be around 50 levels by the end of the year, and currently what we have seen is the central bank is essentially intervening in the markets quite aggressively. We've seen about $15 billion of intervention come in either through direct selling or through sell by swaps. So any kind of support there by the central bank will necessarily keep liquidity tight, and in other words necessitating a CRR cut.
Thanks, Tirthankar, for joining in with your assessment. More leads coming in. So far, 22 in UP leads so far, and they're carved up between the SP and the BJP, but very early to spot any kind of trend out there. We'll slip into a break, come back and keep discussing the political impact on the market. But as we do that, here is Super 6 trading ideas for the day.